There is still a lot of uncertainty in the world today, even though we are past the worst ravages of the COVID-19 pandemic. There is a lot of talk about global recovery prospects, this so-called second wave, and then also the build-up to the US presidential elections on 3rd November. Joining me to discuss these three issues is Frans Cronje, my colleague at the Centre for Risk Analysis. Frans, welcome. Let's start with global recovery prospects. It looks like we are reverting to much closer position to pre-COVID levels. What is your reading of the data and the trends at the moment?
It's immensely positive. You know, David, we made the call early in the year, right at the beginning of the pandemic, that the world would see a much faster, much steeper recovery than more pessimistic analysts were suggesting. That is what has happened. Purchasing Managers Indices data that we track very closely showed a roaring global recovery. I mean, those numbers came back immensely strongly over the past 4 or 5 months. There was a V-shaped recovery there, and that was the real V-shaped recovery. Subsequently, those numbers have begun to moderate a little bit. They needed to because of the highs they got to about a month ago. But from here on, we think the recovery continues, but it moves from this roaring V-shape to a long, hard slog. We've got a lot of corroboration for that too in commodity price data. We track a whole spectrum of those prices. And if you draw the trend lines going back to late last year, you can see commodity prices across the board demonstrating the same thing we see in PMIs, that sharp V-shaped recovery into a couple of weeks ago. And now those recovery curve lines starting to moderate a bit, and the long, hard slog phase of the recovery is what we look forward to from here on out. But it is still a recovery. That's going to persist. We remain pretty firm on that view, and puts us still in the minority of analysts.
Frans, let's turn now to so-called second wave fears. We at the CRA hosted an exclusive client briefing this week with Panda, which illustrated, I think, some of the misplaced fears around the so-called second wave. How do you think that the perception of a second wave is going to affect government policymakers in their response to the pandemic? Are we going to see a second wave of lockdowns?
We're also pretty bullish here, David. We don't think there is a second wave, and we don't think there's going to be a second wave. And that's also advice that we've been giving for a great many months, in fact. You do, if you look at the trend lines for COVID infection around the world, take somewhere like Germany now or France or the UK, you do see that first spike into March and April, and then you see the number of infections falling away. And then you see, in terms of new daily infections, over the last 6 weeks or so, a sharp escalation. Some jurisdictions now recording higher numbers of new positive cases than they were recording in March and April. And this is breeding some alarmist media headlines and some political actors starting to say it's time to move back to lockdown. And this rattles markets, and it threatens to undo this very positive global recovery I spoke to you about earlier. But it's a lot of nonsense, because to be a peak, you need to see a commensurate increase in infections and deaths at the same time. That's what happened in March and April. We saw the number of deaths escalating in conjunction with the number of infections on the expected lag time of about 2 weeks. This later data this most recent data on these sharply escalating infection numbers are not bringing about a commensurate increase in the numbers of deaths, and therefore doesn't qualify as a second wave, and it certainly doesn't justify new lockdowns. And blessedly, global health authorities, although they still somewhat not sure on exactly where they stand, are starting to suggest that lockdowns are counterproductive. So our calls on the second wave business and its implications for the global economy: there isn't a second wave. The media is driving a second wave fears, but hopefully political actors and global health authorities will not break under that kind of media pressure. My call at the moment is we're not going to see a return to the devastating lockdowns that we saw in March and April. And that then further buttresses our advice that the global recovery trend, although it can't remain a steep V forever, is going to remain a recovery trend at least, although it's going to be the long, hard, a slog recovery. And that's what you can look forward to over the next, through the short term and into the early medium term.
Frans, let's now turn to the United States, where voters will be electing the next president on 3rd November. What do you think would be the implications of either a Trump second term or a Biden presidency in terms of the global economic recovery specifically?
Well, let's go to what the numbers show at the moment and then go from there. Becky Mahlobo, my colleague, runs this tracker for us that estimates on a sort of daily basis who's leading, not who's going to win necessarily, who's leading the race in America. This morning, Becky suggested that in the Electoral College, Mr. Biden was leading Mr. Trump by a margin of 76 votes in that Electoral College. Now, that is after we'd given some states with very narrow margins to Mr. Trump, even though Mr. Biden was leading them. So the evidence you have available as analysts, the data, the polling, suggests that Mr. Biden will be the next occupant of the White House. However, that lead is only 76, meaning a swing of 38, 39 Electoral College votes turns it on its head, and Mr. Trump is returned for a second term. And when Becky and I looked through those scenarios, how that could happen, look into places like Georgia, North Carolina is an example. Mr. Biden's got reasonable leads, but the polling in some of these states hasn't been stellar in the past. So the data says Biden will make calls. We don't sit on the fence. Our call is Mr. Biden, but we make that call with a little bit of reservation. Mr. Trump is a remarkable political actor. Let's put it that way. Now, does it matter who's going to win in America? I don't think in the main, in the short term, for the global economy or for the American economy or for markets. And the reasons for that are several. Mr. Trump has been very good for the global economy. He's been very good for the American economy. It recorded record low unemployment rates during his tenure, and he's certainly been very good for American and global markets. If he wins, I think markets' reaction will be muted, and the sort of positive track he's put the American economy and the world on, despite all the sort of tempestuous statements and perhaps sometimes misguided commentary, that will persist. So it's a Trump win, relatively positive outcome for markets and the global economy. If the Democrats win, I think it's pretty much the same. The expectation is that vast amounts of public expenditure will continue to be incurred. There'll be moves at renewed stimulus in the long term, all of which is set to bring about a terrible, but this is the long-term view, this out into a decade, a terrible global reversal, collapse of asset prices. But through the short to medium term, Democrat win should be read as relatively positive by markets and the global economy. So I think we're in a globally, all things considered, every point I've made to you this afternoon, I think the recovery persists. I think the COVID risk is likely to be muted, and I think the big political event, America in 2 weeks' time, doesn't really have a major downside for the global economy or for markets.
All right, Frans. Well, thank you very much for tying all of those trends together. And I certainly hope that we do see this global recovery continue into the medium term. But as you say, long-term risks are still in play. That's all we have time for today. Please do join us for tomorrow's video. And remember to like and subscribe, and also follow the link below to our 30-day free trial. That's it from me, David Ansara. Until tomorrow, take care.